Hey everybody, welcome. Good afternoon. This is Scott Bauer, and I'm back to show you the setup that we just had in Beyond Meat. Now, I personally don't like the product, this plant-based sort of thing. I just kind of like to have a hamburger myself. However, trading the stock and trading the options, extremely interesting, and this was very profitable. Let me show you this setup here, guys. So you can see this consolidation just last week for a few days here. And all of a sudden, we started to tick a little bit higher. And on July 7th here, we had this close here, which was a higher close 3 days in a row here. So our indicator to get in, the technical indicator to get in was the print higher on the 8th, the next day. As soon as we got that here, okay, as soon as we got that here, that was our indicator to get in. So we sent out a signal on July 8th to get in to buy a call spread, the July 160, 165 call spread, buy that for $1.10. The stock was trading right about 154.5 when we did that. The reason we chose those particular strikes, going out with the short strike being the 165 strike, is because the expected move that the options were pricing in at that point was about $10. And the key to any option strategy is to have the stock move to your short strike. So we chose that 160, 165 spread. We paid $1.10. Phenomenal reward to risk. If you figure it out, that's reward to risk of $3.90 over $1.10, which is what we paid as our investment. So well over 3-to-1 reward to risk. So we put that on. As you can see here, stock started to grind higher and grind higher. So what did we do? Well, we don't go out here intentionally to hit home runs. We want to get up to the plate, hit singles, hit doubles, grind it out. So we took half of our position off at $1.85 when the stock rallied to about 160 or so. So right in here, we want to take half off, lock in our profits, and then let the other half ride. And ride it did. We finally took the balance off today when the stock traded all the way up to about 168. We took this off at $2.75. In a matter of 3 days, just based on this really simple indicator of ours, over 100% return in a very simple type of call spread. Volatility was cheap. We know what our risk was. Our risk is the $1.10, which was our debit. That's the maximum we could have ever lost. Everything we do here, guys, is based on reward to risk. And the reward to risk on this was just fantastic. So I want to show you the actual signals that we send out to everybody to see here. So if we look at this right here, guys, here you go. You can see this right here, the Beyond vertical call spread signal, and then the exit signal. Those went out July 8th, July 11th, and boom, 3 days, over 100%. Okay, that's not necessarily typical that we'll get that kind of return in just a matter of days. However, 70, 80, 100% returns, that's really what we shoot for. That's our goal. But remember, just as important as those types of returns is mitigating the risk. That's what we do best here. Risk management. $1.10 was all I can lose. We actually had some stop exit signals in there also, just in case the stock went against us. All right. So your daily market recap here, Beyond Meat. Again, I don't like the product, but I don't have to like it. I love trading the product. All right. So thank you so much for watching today's market update. And to learn more, join me next Wednesday for a free workshop. Yes, a free workshop. I am being hosted by those great people over at Trade Thirsty, and I'm going to share this workshop with you to show you how I use volatility to make money in options and to make the possible setups like this one was to get those 70, 80, 90, even 100% returns. I'm going to give you every step-by-step process. So thanks to the great folks over at Trade Thirsty, and see you guys next Wednesday.